Good morning, traders. It's 8 a.m. Chicago time on Tuesday, the 19th of April, 2022. This is episode number 2215. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we have basically another mixed open. We are unchanged basically on the S&P. You could see that we're hovering around the 43.86. Yesterday's settlement was 43.86.75. The European market is off, is down this morning. Yesterday it was closed, and the European market's responding to the escalation again, this new campaign by Russia into the southeast side of Ukraine, as it's become very, very clear that Putin's intent is to just take Donbass and build a land connection into Crimea and to essentially probably long-term run a campaign and take more and more out of Ukraine. The posture is mixed, really neutral at the moment. We see crude oil coming off. Crude has been trending down today. It went as high as 109 yesterday. It just kept climbing yesterday, and it's down at 104.89 this morning, down 2.5%. The overnight high in crude is 108.37. The low is right here at 104.59. And we're seeing softening in gold, which was hovering around $2,000 yesterday, and silver, which was just above $26 yesterday. It just seems like those are softening a little bit. The other piece yesterday, which was I'll review in a moment, what a whipsawy crap fest yesterday. Just not a fun trade at all. A very schizophrenic market. Yesterday, Bullard came out, and we really need to pay attention to what each of these Fed speakers is saying. Markets is very specifically sensitive to what these guys are saying. And what Bullard said was 75 basis points is a possibility for the May FOMC, which sent the market down. And then as more came out, it would rip right up and back and forth and back and forth. Overall, central banks globally are quite hawkish. There is an orchestrated process here of speaking hawkishly about inflation, about removing, tapering off the balance sheet, about focusing on the consumer prices. Except for China, of course, which is in a stimulating mode. Bank earnings are done. The major banks are all behind us. Insurance earnings start today with Travelers. Also, after the market, tech earnings start today with IBM and Netflix. This morning, we got Johnson & Johnson, Lockheed Martin, Travelers, Truist, Manpower Group, and Halliburton. Halliburton beat by 85%. Halliburton just in a windfall as a result of demand for its oil services with the rise of oil prices. U.S. housing numbers came out this morning. Housing starts beat at 1.793 million units March versus 1.73 million. Building permits 1.873, beating 1.81 million. So that's nice to see. It's more inventory coming on the market. And then we're looking at Fed's Evans at 12:05 p.m. Eastern. The Swiss National Bank's Jordan at 12:30. API crude oil stock change at 4:30. Balance of trade, a major number for Japan. The expectation is a negative 100 billion yen balance of trade, a deficit. Japan exports loan prime rate and the loan prime rate 5-year for April coming out of China at 9:15. That is potentially a mover as well. So that's where that stands. Let's turn our attention a little bit to the S&P. The S&P has traded approximately 200,000 contracts. I'll round those up. 200,000 contracts. The inventory is 16% long. This is meaningless. Essentially, the volume has been almost equally distributed above and below yesterday's settlement. The range is 39.25 points, which is nice to see, as that foreshadows on most days. My guess is probably somewhere around 80-85% of days it foreshadows the minimum range would get during the day session. Although that wasn't true about 2-3 years ago, where the overnight session was like twice as wide as the day session. Day session was pretty dead. And then the point of control at 43.85. Yesterday's point of control was at 4,400. So there's a small shift down. Well, actually, the point of control overnight's 43.99. Is it not? I believe it's 43.99. Not sure why it's not pulling that up. Let me just check real quick. My overnight. Yeah, it looks like it just shifted down from 43.99, which was in line with yesterday, to 43.85 on the overnight point of control. The volume's not so high, so that's probably going to shift very quickly after the open. In view of yesterday, I expected responsive buying into the range, looking for it to push to 90.92, and then I was looking for it to turn over and really start pushing down into this 55 area at least. Most likely, as I circled here, most likely get into the 63, the 63 area. Yesterday's low is at 43.65, actually 64.50. So it got pretty close, but really what we had yesterday is just a mishmash of just crap. It did look like scenario one was on point, though, for quite a bit of the session. So if we look at, we had an open drive, essentially. We opened and we ripped higher. We opened down here. We opened right at the IB low. You can't see it. But the opening print and the low print were 43.76 Now, when that happens, when we have an open drive, you do not get short. And those of you who are at Convergent Trading are in the chat room, I warned early on that you do not want to get short this market, at least early on. With an open drive, there's an indication that there's initiative behavior or strong responsive behavior, and there's a higher time frame in play, and they couldn't care less about your daily the daily numbers. So they're likely not going to stop at yesterday's low or low volume node or whatever. We have to decisively see that the open drive is complete before we start getting short. And that didn't happen until we had a failed retest of the high of 43.99 and a drop. Now we can play both sides. We can look for mid, VWAP shorts, that sort of stuff. So yesterday, this open drive looked like scenario one, looked like it rolled over. It pushed a lot higher than expected. I was looking for 90.92, 43.90.92, and I was looking to get short, and the short was looking to drive down into 63, if not 55 as an extended target, 55.50. That was scenario one. But what we had is an open drive that was almost completely refuted. Here we are, mid-long at the full session, mid-short, at the RTH mid, and then it just goes back and it pushes the IB to a higher level before it's done, and then we get this local double top. Remember, double tops at the high have a high historical probability of being broken. That is essentially a weak high. It leaves a ledge behind, and ledges are not excesses, and so this means that we are very likely to go up and test that area and take it out, at least poke it by a tick. So that left us with a very clear target up there. But then, it pulls back. Look at this mid test. Just a beautiful on the nose 43.90 mid test. Very nice. And then guess what? Breaks right through, and then it ends up taking the IB low. And it's just like, oh man, such a clear target up there. Mid test holds, high probability trade, very strong possibility for a push to 44.10 at least, and then it just peters over and falls thanks to Bullard at the time, or the repercussions of Bullard's comments from yesterday. And then so we extend the IB low down. We end up pushing to 64.50. Remember, we're looking for a 63 test. It's an old point of control. And then it comes right back to the RTH mid. Look at that mid test on the nose, 43.84. So we had one on the nose here at 90. We extend the range down, so the mid drops. We get a test of the mid on the nose, and then it rotates down about 11 points, and then it just rips your throat out on the way up, and it extends and breaks that double top IB high. So it's very, very odd. And so we end up testing and taking out the IB high, which gives us a neutral day. So the question becomes, are we going to close neutral extreme or neutral balance? We run all the way to the other side, missed the low by 2 ticks, only to close right in the middle of the range, right against the prior settle. I got to tell you that yesterday, it's a lot of people got crushed yesterday, I bet, because this kind of movement is very lethal, because it doesn't really follow, it's not really following any obvious or big picture criteria, in that we're looking for retests, pullback, continuation type trades, and it's just ripping right. It looks like it's holding, and it just rips right through. And the way the volume was coming across the tape yesterday, with the delta kind of staying negative all day long, you could see that the delta was really negative throughout yesterday. What's going on here? It was negative throughout yesterday's session right here. And it was just very difficult to trade it. So to me, this is the kind of day where it'd be easy for me to hit my daily loss limit. Once I saw this drop right here, retests to the tick, and then just this really expansive, look at that rotation. Holy cow, 33 points. 33 points without a single 16-tick pullback. That's just big. To me, that was like, okay, this I'm very likely to get crushed here, so I stepped aside and didn't trade for the rest of the session, and had really no comments to make except to say this is not a great trade. So if you had a hard time yesterday, it's in the cards. It's tough, but it's in the cards. It's something that could happen. And those kinds of days are relatively rare. It's nice to see that. I mean, look at this thing. Rip up, way up, way down, back up, just all over the damn place, with a profile that looks like it had a poor high yesterday. See, this profile has a very poor high, and actually a pretty decent taper on the low on the full session, and an okay taper on the low in the RTH session. So it leaves us with a weakish high, which we managed to, at least based on our auction rules, at least it did the right thing this morning and took out that high to go to 44.11 and kind of clean that up. The profile right now is a double distribution. It's a multi-distribution profile. The point of control at the low. At the lower distribution, look at the VWAP and mid. Currently, the VWAP mid are on top of each other at 91.50. That area, the 91.50 and this 94 area, are really the line in the sand early on. This little box. Let's see if I can draw a box here. This box right there, that's our line in the sand, and it looks like it just it created a zipper at the low, which creates a weakish low. So the expectation is maybe we open where we opened yesterday at 76.25 and test down and challenge that low from yesterday at 64.5. Again, overall, big picture though, I'm still looking for this 34, the 43, 34, 50 level. I'm expecting this level to be tested still. So we'll see how that goes, but you know, I'm going to press opportunities to get short. If you look at what we did on Thursday, we went up here and we had a very swift rejection of these upper prices. Even though we closed up here the day before, on Wednesday, we had a very, very clear rejection of these upper prices into the 44.20. As long as we remain under this 44.20.29, I'm expecting it to go to 43.34. So that's what I'm gunning for in the big picture. And yesterday's scenario one was looking for that. It was looking for 90.92, fail, wait for the failure, look for the failure, look for the market unable, retesting upward, unable to take that high, look for the short, and look for it to drop to 55.50. And then if it doesn't hold 55.50, it was unlikely to trend yesterday with the markets in Europe and parts of Asia being closed. Look for a continuation down to 43.34.50. We may get that today. Today is likely to be a somewhat busy day, so we'll see how that goes. That's the big picture, folks. That's what we're looking at for today. What is, let's see. That's what we're looking for today. So let's see where we are in terms of oh yeah, look at this crazy if you follow this, the blue and red, that's the cumulative delta. Look at that cumulative delta. I mean, an incredible amount of buying into the open. Let me just open this up. This was yesterday. You could see that, you know, just a very sharp drop. And then just a very strong, the closing trade in the ES had a ton of buying. And the very large lots, which are 100 lots or better, 10 to 99 lots, strong participants in that to almost bring us back into bounce. It did bring us back to zero, essentially. And then the delta restarts. The delta restarts for today. And so far, the delta has been really mixed, and it just got hammered and went negative as we dropped in the ES after the test of the mid 43.91, 92 mid and VWAP. As it tested those right after it started to drop, it dropped back to where it is now, and the delta really was very active during this period. This is why I'm expecting the overnight low to be taken out. That number 71.50, and so I'm looking for that to fail. I'm looking for us to move away from where we are now. I'm looking for us to trickle down and really test this low and this low early on. That's the idea for today. I have an announcement for you. On Thursday, through Convergent Trading, I'm going to be doing our monthly public webinar. This month, we're going to talk about how to grow a small account, small trading account, and we're going to give you pointers, a checklist, and a few other things that you need to do, we believe you need to do. And remember, my background is prop trading, so this isn't coming from someone who's just been kind of learning for myself and then giving you this information. I've backed traders. I've had to deal with the learning cycle of many traders in my prop shop. And so we're sharing some of these ideas with you and looking for you to actually do the work and be disciplined about it so you can grow your small account or pass your combine or your gauntlet or whatever you're doing. That's the goal of this particular talk. On April 21st, Thursday at 1 p.m. You can register, and you'll find this in the description of the YouTube video. Go to ct.pro/growing-a-small-account in order to register, be there live, or register so you can be sent the recording if you will not be attending live. And yes, it'll be recorded and it'll be provided to you. Here's what we're looking for today so we can wrap up here. So for today, our primary scenarios discussed, assuming we don't get an open drive higher on the open, I'm looking for it to open around yesterday's open. I'm looking for it to respond to the upside somewhat, take out the new overnight point of control, take out yesterday's the current VWAP and mid, test the VWAP and mid, and potentially push to 92 to 94. This will be the early line in the sand. I'm expecting that to fail. I'm expecting a retest, and I'm looking for it to push the 71. I'm looking for the overnight stat to be taken out on the low side. I'm looking for this thing to run down and push towards the 34. The 34. That's the key today. I'm looking for this thing to kind of spill the beans and get us down into balance here, the major balance, the very major balance area, 43.34. This is the primary scenario for today. It may only partially make it there, but I'm looking for it to push the structural setup currently. Lower high, lower high, lower high. So the one-time framing is downward, and on the daily and the weekly, I'm looking for that to be supported on the downside. I'm looking for it to continue to flow to the downside. Open auction in range. Open auction in range. Test to 71.75. Make an attempt at the 64. Potentially poke. Impulse up. If we find it back above the open, it's likely to test 92.94, and it's likely to go and check the session over underline, which has not moved, at 13.14. 13.14, and then ultimately the goal is to retest and recapture the 29. So buyers are going to want to take back 29. Once they take back 29, that'll be a nice little squeeze. The goal is to hold on to it. If they hold on to it and consolidate and coil, then they can make a run for 44.60 and really shove these sellers back. The 44.60's current resistance, key resistance. That'll be the goal for the next session if they hold 44.29, barring any bad news. But really, the easier flows to the downside simply because we're one-time framing in that direction. Okay? Good luck today. Don't forget to register if you want to attend or receive the recording of Thursday's webinar. I'll catch you tomorrow morning. Take care.